Friday, March 20th, 1:59 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Going to discuss day trading, investing, focusing on the U.S. dollar index, King Dollar. The U.S. dollar index is just like it says. It's an index. It's comprised of several currencies. I have other videos going detail on that, but I'm going to keep this short and on focus, I think, on two major things. Economics. United States currency, dollar, U.S. dollar, because there's other countries that also call their currency dollar. So I want to make sure you hear me. This is the U.S. dollar I'm referring to. U.S. dollar. Most places worldwide have a correlation with the U.S. dollar. That being said, a stronger U.S. dollar, other nations have to pay more for our products. That hurts our economy. That hurts the United States economy as a whole. That hurts the United States manufacturers. If the dollar is strong and continues trading stronger, many places have less buying power for those products and services the United States exports. What could occur following that is they cut back on requesting those products and services. Then those companies have several choices to either reduce the cost of those products or services. That will hurt their profit margins. They could also select to outsource more of their products and services, outsource even in the continental United States or abroad for cheaper labor, cheaper utility costs, cheaper insurance. The other thing is they could cut back on labor in the United States, cut back on overtime, cut back on salaries. So doing that, or the first one I mentioned, outsourcing the jobs, that could increase unemployment in the United States. Yeah, a lot of geopolitical things that could occur on a currency. Yep. Again, if we don't use paper currencies, we could go back to biblical days and use coins. There was inflation back then too. So don't think some degenerate person making a comment saying, oh, we just should go back to gold standard or gold coins, copper coins, silver coins. Yeah, there was inflation on those too. So the situation is legislation branches of each government, they have two things they typically try to accomplish. And more often than not, both don't go equal. One is to save a nation's economy, keep the economy growing, keep it stable, and have low unemployment. And then there's certain times there's high risk, such as now, high risk, extremely high risk. It's very hard to do both. So historically in the United States, the past presidents, if not all, but most, or maybe all, have made this decision to save the economy, which would have the downfall of the and higher unemployment. Some history not too long ago, after 9/11, when the younger Bush, not the daddy Bush, the son Bush, was president of the United States, and people were afraid to start going to malls shopping because they are afraid of terrorism when the 9/11 happened. Local governments, municipalities, cities, counties, states start suffering faster. Yes, a lot of states have sales tax and income tax, but a lot of them get their brunt of their money from sales tax. So as the consumer dried up, a lot of them lost their local tax revenue, and it has a residual effect from local to spreading. So that time the president went on the media live and came out and said, people, Go to the malls, go shop, go spend money. That means he was saying he was first off trying to save the economy, not labor. Yes, residual effect, it also helped labor, but the first thing was the economy. So things could go worse here. We could have higher unemployment months down the road, which again could lead to worsening economy. But again, there's a pivot. There's time frames these things happen. Okay, enough on that. That's many other videos I cover that. Let's focus here on the currency. The US dollar index. The top horizontal row is the US dollar index, and the bottom horizontal row is the euro. I'm showing you the euro here because it's the largest weighted currency inside the US dollar. On the top right, that is the weekly chart. The middle chart is the daily, and the far left is the 4-hour. Same time frames on the bottom. So look on the far right, the top chart and the bottom chart. The current candle is yellow, both of them. That means all these activities that took place this week, the United States debt breaking $39 trillion, the Federal Reserve leaving interest rates unchanged, oil prices going sky high, stock markets hitting new low. There's a lot going on. Well, the US dollar still is inside the range of last week. That's amazing. And same with the euro, still inside the range of last week. Now we go to the middle charts. That's the daily time frame. Again, the US dollar and the euro are still inside the range of yesterday. That's amazing. That's a coincidence, conspiracy, whatever degenerate words you want to use, entertaining words you want to use, create fear. Yeah. Again, the market's not closed yet. Things can still change. Well, what does that mean when there's a yellow candle? The way I have it designed, programmed on my computer, again, it means it didn't take out the higher low of the prior candle. But in technical terms, regardless if I use bar charts or candlestick charts, for example, it simply means indecision. Market, Wall Street's traders, investors, you, me, the person next to you, behind you, around you, undecided. And it's reflecting here on multiple time frames. Now on the far left is a 4-hour candle. That current 4-hour candle, that new one, that started at 1 p.m. Remember the other ones on the left, the far left are daily. Yeah. So look at the green horizontal line on the top chart on the left and the red horizontal line on the top left, on the far left. So that red horizontal line, that was the highs of yesterday. The green horizontal line down here on the left was the low of yesterday. And then from that low of yesterday, the US dollar has been trending up, smaller trading ranges. But yesterday, look at those 3 big red candles. That was a huge panic selling of the US dollar. I placed swing trade positions, bearish US dollar yesterday. I am still in those positions and been adding more to those. I am bearish the US dollar, trading bearish, have gains already for swing trading. So this area, this red area, that's a zone, that's a supply zone, that's an imbalance area. So it makes sense from yesterday as we start to reverse trend, trending up, for day trading bullish today. Yeah, day trading bullish today, the dollar, into this zone. And now, again, see these big wicks here on these 2 green candles versus these big red candles. Each big red candle here was bigger than the other one, longer trading range. And then you have the big wick there. So this is telling me right now, sweet spot for looking to trade bearish, to reload bearish. Because those 2 green candles are not closing near the highs of the trading range. Nope, they made the highs, top of those wicks, and failed to sustain. Well, the trend is up, higher high, higher low. Again, the market's not closed yet. End of the day, we could still have a reversal before that occurs. An inverse here on the euro. So one could be trading bullish the euro. Yep. I'm going to take it to a lower time frame. Same thing, financial instruments on top, US dollar, and the bottom, the euro. These stock symbols, they are in the futures markets, two different futures exchanges. The top one, because it has a dollar sign, DXY, that trades in the ICE exchange out of ICE. No, I was going to say Iceland. I'm kidding. That trades on the ICE exchange, which is located in Atlanta, Georgia. That's a futures market, trade derivatives. The bottom, /6E, the euro, that trades on the futures markets out of Chicago. Again, different companies competing against each other to list currencies, and the symbols are different. There's more than one futures market. There's more than one futures exchange, I mean. So again, the far right is the 1 hour chart, the middle is the 15-minute, and the far left is the 5-minute. Zoom in on both of these. 1 minute, yep. So here, the dollar, again, yesterday in the evening when it opened up, it gapped up. The gap hasn't been filled yet. That's the orange line. Look at this bullish pin bar here yesterday. Regular trading hours. Then the extended hours come here. Staircase pattern higher high. Again, look at these big red candles. Big strong green candles here. Big body retracement in a strong demand zone. This green area is strong demand zone. It was a sweet spot to be day trading bullish. Strong reversal. Ran up. Broke the swing high here. That red horizontal line. And this is how things are going now. Reversal. Sweet spot. Setups on the 1 hour as well as the other time frames I showed you. The inverse here on the dollar. I mean, the reverse here on the euro. Bearish pin bar. Nice. Yeah. And these swing points here on the bottom right on the 1 hour, the euro. Nice. Look at that. Swing points here. Went up, tested it, rejection. This was a nice setup to be trading. Bearish the euro along the dollar, which happened to be here. Nice. Again, much more significant, higher probabilities on these higher time frames, more successful candlestick chart reading. And then looking for the, again, setups on these higher time frames. And the singles looking on the lower time frames. So we're looking here in the top center one, the dollar, this green area here. That was the Asian session. This purple one was the London session overnight. Zoom in on both of them. So again, top center grid, the dollar, the bottom one, the euro 15-minute. Understand, we had the we had the London session, the lows of the London session here. And then the end of the London session, the trend reversed, went up higher, broke above the London session here. Around 6 a.m., currency reversed, sold off. All that red selling off. Consolidation. There was no major economic news this morning for U.S. Consolidation here between the 8:30. Reversal. Trend up. Look at this big green candle. Strong bullish body. Look at that red candle below it. It's to the left of it. What a fake out. Thinking the trend may reverse, but again, it continued going higher high, higher low, that red candle. So the trend did not reverse, just the candle color change. It was in this imbalance area, this red area, looking for a potential reversal. No single came. Nope. So you wouldn't want to go short there. No. Big green candle, big solid body. Broke above it, closed above it. Nice. Looking for pullbacks to go long in here. They did not occur. The momentum continued going higher. Broke and closed above this swing high. Nice. And then the inverse here on the euro. So again, you can either trade the dollar long or trade the euro short. Again, depending on how your broker gives you access to what futures financial instruments, if you have that. I'm going to put this now, this middle grid, but use the drawings from the 1 hour so you can see it. There we go. So again, this on the far right, the 1 hour demand zone here. Zoom out here a little bit. The middle chart, 15-minute. Again, the setups, the drawings off the 1 hour here. So significant here. Inside candle right there. In a demand zone where buyers are. Nice. Zoom in some more. See these buyers right here, those big wicks on the bottom. Nice reversal. Yep, one could have gone long on the break above that inside candle or the break above this consolidation. And look at that. Nice run up. Target the swing point up here. Look, all these people late getting in the trade here. Huge move up, extremely bullish this 15-minute candle. So a lot of people bought there instead of buying down here the sweet spot. Me personally, buying down here, using it as a target place to consider taking profit when the new traders come in. Sorry for moving it so much. Yep. And then you can see again reversed. Let's go here on the 5-minute. On the top left, the 5-minute. Let's actually open it up. There we go. 5-minute chart. Again, the London session here. Zoom out. The London session low, reversal, imbalance area, this gray area, ran it up. And then these vertical lines are significant time frames. That's why I have them there. First one's 0700, 7 a.m. We had that runoff, trend reversed. And look on the downside, the target imbalance area. Even at 7 a.m., the momentum still continued. Go past it, break below it. Coming into the top of the hour, 8 a.m., there's a horizontal line, vertical line, 8 a.m. You have huge consolidation. Yes, prices went lower. Huge consolidation building up over here. This was an imbalance area made here and here. Potential targets on the upside. What happened? Imbalance area, like it, right here, between the 7 and 8:30. Accumulation, impulse move up. This was a consolidation, impulse move up. That strong green candle made this demand zone. Nice, looking for a potential entry. Never came back here. So I didn't take that because it didn't occur. But was looking for a setup. Nope. Went here, consolidation inside that supply zone with seller tour. And what happened? More buyers than sellers, strong enough to break above that. Nice. Continual momentum up. Look at these big green bodies. Almost solid, but strong, strong, strong. Another target price on the upside. And taking off like a rocket ship. And that was the 1 hour drawing on the 15-minute. Sorry. Apologize. That's the 5-minute chart with the 5-minute drawings. But I want to put in the 1 hour drawing now. There we go, the 1 hour drawing. The 5-minute chart, the 1 hour drawing on here. So again, demand zone, looking for key levels to be buying here. And let's put in now the 15-minute drawing on this 5-minute. Now we got the, again, 5-minute chart, 15-minute drawing. Key levels, how they work. Nice. And the other one, again, on the bottom. Just to share you some insight on the significance of what's happening. The US dollar. Commodities are priced in US dollar. Also, stronger dollar, like I said, hurts manufacturers, companies. Yep. So the US stock market is red right now. US stock sectors, mostly red. The Magnificent Seven, red. Stronger dollar, I told you, hurts economy, hurts the companies in the United States. Another reason you have the weaker stock market. There's a correlation. Consider to stay situation aware of the US dollar and the value of it. Most people only select to look at the stocks, stock market, stock indexes. Thank you as always, spending just a little bit of time with me. That's it for the video. Thanks for watching.